The content on this channel is for informational and educational purposes only. Please contact a professional when it comes to your financial needs. Concluding the first week of the savings challenge, traditional savings accounts versus crypto saving accounts, we're going to go by the tail of the tape and see how they stacked up right here, right now on the Ujamaa network. I'm Antoine. Let's get to it. A week ago, really about 6 days ago, we put in some small amounts to a savings account, a crypto staking account, and a earn account on Kraken. So we had two crypto accounts on Kraken and one savings account. And what we're doing in this experiment is seeing how your money reacts to the different saving environments. Now, this is going to be an ongoing series. I'm going to have you check in with me and make sure that you're doing the same thing in your own lives, hopefully, so that you'll have kind of a better understanding of what we are trying to accomplish here, and that's building generational wealth through some type of savings account. This doesn't involve any trading. You pick whatever trading account or savings account you want to use, and you just see how the money is growing, if it's growing at all. Now, I've got some surprise information. Well, it might be a surprise to some of you, of what's going on. So when we started, we had a $25 deposit in each one of these type of accounts. I'm gonna try to do that weekly, or every other week, with every paycheck. Just put a little bit aside. Nothing big. If you can't do 25, do 20, do 10, do 5. Just put something aside and don't touch it. The discipline that comes in with that, doing it. Because I guarantee you, by the time you hit $100, you might be thinking, that's a new pair of shoes, or that's a utility bill, whatever. You know, don't touch it. That's your savings. And let's figure out which one is going to grow the most, the fastest, which ones are going to lose you a little bit of money. Let's get into that discussion right now. First off, we're going to look at our Kraken account. And what you'll see here is that the bond earned, which is basically staking, and I staked some Ethereum, $25 I started off with. I want you to notice what's going on here. You got magnified losses. Not only did you lose with fees that you are paying when you set up the savings account, you got losses due to the fact that Ethereum has dropped a good chunk of money this week, and that's reflected in your balance. You've staked something, and in 6 days, you've actually not earned any rewards whatsoever. Nothing's been made. Now let's go over to the auto earn feature in Kraken. And what we've got here, similar losses, but you got lifetime rewards of less than a penny. Actually, what you got is a 10,000th of a percent increase, but that's offset by the amount of money Bitcoin lost in its value reflected in your balance. So your $25 is now 23, 25, and then for your staked, you're down to 21. Now, this kind of change is what risk is all about. As I'm going to show you with the traditional savings account, you put your $25 in, and the $25 is still there. You didn't pay any fees on that $25. It's still sitting there, but it's not having a potential to grow. What you're seeing with the crypto savings accounts is whenever those coin market values rise and fall, so does your savings if they're tied to them. In other words, as goes Bitcoin or Ethereum, so goes your savings proportionally. You're losing money. Now, the upside of this, where risk comes involved, and that's what you are risking, is the value of your savings being lower than what you put in exchange for those savings being much, much higher when Bitcoin goes back above 120,000 or back up to at least the price at which you purchased it at. It's one of those things. You're tied to trading without actually trading. Your value of your savings accounts is reflected by the value of that coin that you are staking or saving on. This is a crypto savings account. So I want you to understand that this is what's known as risk. It's not guaranteed that you're going to make a killing on cryptocurrency, whether you're trading or just saving it. Sometimes it's almost guaranteed that you're going to lose some money. But we're in this for the long haul, right? And we're showing you the different types of investments and savings that you can perform on your own with very little money. These variety of savings accounts will give you a better understanding on how you can make this money work for you, but no matter what amount of money you got coming in. I'm going to continue this trend of putting money in. I'm still going to put $25 in these losing accounts. Again, this is a week. What happens when it bounces back up and you put more money in at the prices you're putting in? You're cost leveraging because now you're buying more crypto or staking more crypto at lower prices. Things are starting to click to you now. And it's not about making the big $1,000 trades all the time or making huge purchases. Sometimes it's just a little bit at a time. And what comes with that is a discipline because you're not touching this. You got to teach yourself not to touch the money you're trying to save. It'll help you understand what actually constitutes an emergency. Is my flat tire that's going to cost me $75? Am I just going to bite the bullet and take it out of my savings account? No, you got to get that money from somewhere else. Hustle, do what you got to do, but don't touch those savings accounts. Treat it as if there is a last resort and then there's your savings. You go to that last resort before you go to your savings. You understand what I'm saying?